Today I'm going to go over my worst trade, my psychology behind it, and in turn expose what I could have done differently so that I don't make the same mistake again and maybe prevent you from making the mistakes I did. I'm defining this as my worst investment in terms of capital percentage depreciation and duration. My worst trade was investing in natural gas. At the time I took this trade, I knew Russia was one of the major global suppliers of natural gas, and they were invading Ukraine, which the Western world is opposed to. I kept seeing articles about the European Union canceling trade with Russia, while they had been so dependent on Russian gas at the same time. My investment thesis was that this would skyrocket the price, being that insecurity in supply usually drives up demand, and in turn price. To invest in natural gas without trading in the futures market, I found a double-leveraged natural gas ETF called BOIL. I started trading BOIL on May 9th, 2022, initially testing the waters and getting comfortable trading in a new asset class, as I had previously only traded and invested in stocks. I had some initial success, having 7 positive trades in succession from May 9th, 2022 to June 29th, 2022, for a gain of 5.5% in 52 calendar days. Here's where all my confidence was built, and I decided to ramp up my investment capital. On October 17th, I accumulated my largest position for a total of $893, and from here I started averaging down while the price continued to fall, as I accumulated $2,664 more worth of BOIL, for a total of $3,557. While accumulating shares, I also quickly made a 35% profit in 6 days trading call option contracts. I still had conviction in my investment thesis, and I thought I would have a tailwind due to the coming winter and the pressure that would put on the demand side of the natural gas market. Furthermore, the conflict in Ukraine was continuing to escalate, and I thought this would keep the supply in scarcity and fragility. This didn't happen, and miraculously the price tanked. I had no downside plan, and I just continued to hold, and I'm still holding, just hoping for a miracle to happen, and for the price to rise in the same meteoric fashion that it fell. Currently, I'm down 80.5% on my investment, and I turned $3,557 into just $691, and I've also tied up my capital for more than a year, which is time and money that could have been invested more effectively elsewhere. Ultimately, there are many factors that influence the natural gas market, like governments and policy, seasonality, supply and demand, and geopolitical conflict. I didn't and don't know the depth of all these influences and how they impact the price of natural gas. Furthermore, commodities and currency have no foundation or fundamental metrics of value like companies do. For example, you could look for a company to buy with a good risk-to-reward ratio based on a low price-to-earnings ratio, or a historically high dividend yield. Commodities don't have this valuation framework. So what are the main takeaways here? The first one is to know the asset you are trading or investing in, and be as informed as you can. If you don't know a market, don't trade in it. Also, I made an error as old as time not having a downside plan, and I didn't foresee natural gas losing so much value so quickly. So we should always have a plan for what we'll do given any movement in price direction. So those are my 2 main takeaways. Let me know what your biggest learning lessons have been in the stock market. If you want to see my best trade of the year, check out this video.